Welcoming everyone to the first session of day 2. Here, the esteemed speakers are going to speak about making India an attractive investment destination. For this, we have Ms. Pomila Jaspal as the chair. Ms. Jaspal, a fellow member of the Institute of Cost Accountants of India, ICMAI, and gold medalist, joined ONGC on 1st April 1985. Before her appointment in MRPL, she was Executive Director, Chief Corporate Finance, ONGC. She handled varied assignments, including corporate finance functions. Ms. Jaspal was also on the board of ONGC Petro Editions Limited. We welcome you, ma'am. I would also like to welcome the esteemed speakers. We have our first speaker as Ms. Deepa. Ms. Deepa is supporting the technical cell as Technical Officer to Additional Director General in Directorate General of Hydrocarbons. A chief geophysicist having 15 years of experience in oil and gas industry, she has knowledge in different domains of exploration. She will be presenting on the policy framework for encouraging E&P sector. We welcome you, ma'am. I would also like to welcome our next speaker, Mr. Vivek Rahi. Mr. Rahi is the director at KPMG. He has over 14 years of experience in energy sector and has worked extensively with oil and gas companies, regulatory bodies, ministry and financial institutions. Prior to consulting, he has worked with Reliance Industries Limited as key account manager for KG D6 Gas. He will be presenting on Indian hydrocarbon sector and attractive investment opportunity. We welcome you, sir. I would also like to welcome our next speaker, Mr. Rakesh Agiwal. Mr. Agiwal is the Chief Commercial Officer at Cairn Oil and Gas. At Cairn, he has been instrumental in defining the financial processes and controls, partnering with the business units in operations and decision making, closely working with the business partners and service providers, regulators, and the Ministry of Petroleum and Natural Gas. He will be presenting on the global perception on Indian E&P sector. We welcome you, sir. I would also like to welcome our next speaker, Mr. Raajeev Tirupati. Mr. Raajeev Tirupati is an experienced professional with 11 plus years of diverse experience across oil and gas and information technology sectors. He currently heads the commercial team at Antelopus Energy. He has extensive experience in commercial analysis, M&A, and business planning. He will talk about the acceleration E&P investment in India. We welcome you, sir. Last but not the least, I would like to welcome the co-chair for the session today, Mr. A.R. Patel. Mr. Patel is former Executive Director, Finance, ONGC. He is the organizing committee member of Upstream Ahead. Mr. Patel has extensively contributed to the preparation of the monitoring committee report. He was also the member of the committee to review PSC provisions. Sir, may I now request you to commence the session, please?
Good morning, everybody. Now I invite Ms. Deepa to speak on the policy framework for encouraging the E&P sector in India. Please, Ms. Deepa, please.
Thank you. Thank you for providing me this opportunity. Am I audible and visible?
Yes, yes.
Thank you. So first, let me put my word of thanks to providing this opportunity to share my thoughts. And I'm pleased to be in panel with Mr. Vivek, Rahi from KPMG, Mr. Rakesh, and Mr. Raajeev. Thank you, the chair, Pomila madam, Jaspal madam, and A.K. Patel sir. So in couple of slides, I'll be talking on the policy framework for encouraging the exploration and production in India. Well, so there are basically 7 key drivers in India's energy map. And the most important out of all the initiatives that are being taken up by Government of India, gas-based economy is, is emphasis for these days. And Government of India, we want that the share of natural gas is to increase from 6.3% to 15%. The second is the cleaner use of fossil fuels. The third is the biofuels, the use of biofuels, and many initiatives have been taken by Government of India for this. Then achieving the renewable target of 450 gigawatt by 2030. Then decarbonization is in the air. We are trying hard to get the carbon neutrality, net zero target is there in front of all of us. Then emerging fluids like hydrogen. Many good initiatives have been taken by Government of India for this hydrogen part. And digitization is the need of our, and several incentives have been and policies have been taken for digitization part. And additional to that, there are two main things of Vision 2047. One is Atmanirbhar Bharat, and the second is energy independence to the country.
Ms. Deepa, you're on mute.
Well, am I audible now?
No, yes.
Yes. So India's growth strategy, this story has grabbed the attention of the entire world, the economists, the political heads around the globe, and have acknowledged the remarkable, development. And India has a high growth trajectory. So now India is recognized as one of the world's fastest growing economies, which is evident from the fact that the ease of doing business ranking has jumped from 142 in 2014 to around 63 in 2020. So India aim to become a USD 5 trillion economy by 2025.
Deepa, madam, there is some technical glitch. Hello, Prasanjit?
Yeah, Ms. Deepa, we're not able to hear you.
Am I audible now?
Now,
Yeah,
yes,
you're
yes.
audible now.
Yeah. So this is the major evolving ENP policy frameworks. So there are evolving, this is a slide that shows about the evolving ENP policy framework. I have captured some of the major policy reforms that took place from 2014 till 2022. And right now, this is a glimpse of the major policy that you can see. If you see in this slide, there is a green color that shows the policy reforms, and the black color are showing the bid rounds that have been taken place, and orange what are initiatives that has been taken in terms of data initiatives. So the government of India has always offered, support and intensive with key proactive and transformative changes, especially whenever the industry was reeling under a low price regime and a global competition. So there is a holistic revamp of Indian E&P industry, and several initiatives have been taken up by Ministry of Petroleum and Natural Gas, like quality of E&P data generation and providing easy access. Then fighting future oil and gas by awarding new exploration acreage. Right now, OLP 6 and 6 round and 7 round is going, and then also special CBM round is launched. DSF round is going. So these are some of the initiatives for new exploration licensing policies. And then expediting production from development acreages and increasing production from the existing acreage, development of gas infrastructure and gas pipelines, and encouraging the relaxations and the incentives from Government of India side. So DSF and OLP are the twin pillars of Indian ENP regime, current ENP regime. I hope my slide is moving. It's very slow.
Yes. New slide has come.
Right. Okay. Thank you. So the government has created an investment-friendly ecosystem by continuously, ushering policy reforms and projects that has transformed the landscape of the sector. Some of these reforms are the successful rollout of help regime, as I told, from production sharing contract system, we switched to revenue sharing contract in our open area licensing policy that we call OLP, because I came to know as a organizing committee member that a lot of students are also connected here. So I'll try to make these policies, explanation very simpler, that from production sharing contract, now we have switched to revenue sharing contract. And so there was a paradigm shift for the switching to from production sharing contract to revenue sharing contract. Then these discovered a small field. They have attracted investors small for the small and isolated fields. DSF 3 round is launched, as I told, where government has further done reduction in compliance burden, and ease of doing business is also enhanced. Then in 2018, this enhanced oil recovery policy has come, and this was basically through for infusion of latest technologies. This EOR policy came in 2018, where fiscal incentives were provided. Then there were other policy reforms also, like 100% weightage is given to minimum work program for category 2 and category 3 sedimentary basin, 70% of the weightage to minimum work program for category 1 basin, and then NOCs are also allowed to induct private sector partners. So this is just a glimpse of some of the important steps taken by the government of India, specifically the Ministry of Petroleum and Natural Gas, for reducing our compliance the burdens, and making the process much easier and faster and investment friendly. Like as I already told, the transparent bidding, the bidding is made more transparent. The revenue sharing model is there. Then no revenue sharing is for category 2 and category 3 basins. There are low regulatory burden. Single license for all type of hydrocarbon is there, be it conventional, be it unconventional. Then one very nice policy reform for gas has come, full marketing and pricing freedom. I'll be talking more on this. So as I already mentioned, OLP, Open Area Licensing Policy Framework, bid rounds 6 and 7 are going. And there have been incentivized royalty structure in OLP. And there are different concessions that have provided based on category of basins. One thing to be noted here is that for bidding specific to the basin category, there is no revenue share in category 2 and category 3 basins. So such kind of incentives are being given by government of India for promotion of more exploration and production in the country. Now, these are some of the salient feature of discovered small field bid round 3, that is the bidding process is to be started. And 32 contract areas have been awarded in this, which contain around 75 discoveries. And the bid submission will start in April 2020. So some of very good features I'd like to mention here, that there's no minimum biddable work program, single license, as I told, for a conventional and unconventional, royalty in line with help, and no cesses there. Then there is full pricing and marketing freedom, and the exploration is allowed during entire contract period. Earlier, this was not the case. Now, this slide is a very interesting slide that as compared to other countries, the government take in India is one of the lowest. And compared to the earlier regime, that was production sharing regime, now the revenue sharing regime, the government revenue share is capped at around 50%. And there is no cess. And the royalty has also been reduced. Earlier it was 5 to 20% for pre-NELP and NELP. For HELP regime, it's around 2 to 12%. Then many other incentives, like for early return on investment, early monetization of hydrocarbon discoveries, fiscal intensive incentive for EOR, marketing and pricing freedom. These all are there from Ministry of Petroleum. Now, for unconventional hydrocarbon framework, also many policies have evaluated from 1997 to till date. A special CBM round, as I told, is going on, and in that special CBM round, 15 blocks in 6 states are offered, and there are 4 sedimentary basins that are covered, and they have some good features I like to emphasize here, that all blocks on offer in category 3 basin, that is no revenue sharing until there is a windfall gain. Then there is a full marketing and pricing freedom for gas produced. There is a single license for unconventional and conventional hydrocarbons. Earlier there were a lot of issues going on for overlapping of the blocks with coal or forest land. So all that, the blocks that are offered right now, they have no overlap issues, and there is 100% participation from foreign companies or joint venture. Then there is a yojana of Pradhan Mantri Yojana Urja gas pipeline. So through that, this facility of gas pipeline infrastructure has also been provided. Now, this is also a very interesting slide. This shows that investment of around USD $60 billion is expected in next coming 5 to 6 years. And we are trying from government side, there are a lot of enabling policies and regulatory framework to complement these investment. Like there is for gas, there is this gas trading exchange is there, e-bidding platform has been made, and investment opportunities, the CGD bid round 11 is completed. For ease of doing business initiatives, many different steps have been taken. Like there is a single window clearance system where it connects the upstream company to different arms of government, and it allows a electronic filing of application. So that has reduced the timing. And then there is online contract management system in order to make the process hassle free. And there is a self certification process. I think that this is a very wonderful step that is being taken, that all the approvals are replaced by self-certification by the contractor. And also there is environment was a very big problem. Mr. Rakesh is here as a stakeholder, and Rajesh is also here. So this environment clearance was a very big problem, and last year there was almost a lot of effort have gone in order to make these process simplified, and a team altogether a hydrocarbon clearance cell has been established, and a team has been placed at different offices in Northeast specifically to for the stakeholders, wherever there are issues of related to environment or the forest clearances issues, they are getting resolved at the earliest. So this is one of the very beautiful step that is being taken up. And yeah, so here I would like to emphasize 2-3 things very important. That one is the clearances. From the clearances side, there is a Urja Pragati platform, and this platform is basically for tracking every upstream operations on a project management approach. And then I already mentioned about hydrocarbon clearance cell. Then there is Upstream India portal. So this is basically for the facilitation of E&P operations, and it's an online portal to expedite the PL and PML licensor grant and the other clearances. So coming to the reduction of carbon footprint, this is the need of the hour, and many initiatives have been taken up for this. Several initiatives are in line to reduce the carbon footprints. There are a lot of challenges, and this is one of the report of IEA I have taken, that what are the major challenges that not only for green hydrogen but for carbon capture, utilization, and storage. High cost is one. Then the policy reforms from the government of India are needed. That is a need of the hour. And then technological challenges, a lot of technological challenges are there in these technologies. So one part of the equation is that has to be addressed is for this affordability, because we are not a very rich country. So cost of CCUS or green hydrogen need to be reduced. And these challenges that I have mentioned here, they can be overcome by few measures like, direct capital grant that meant to provide funding to overcome the upfront capital expenditure. Then operation subsidies may be one. This may include, multiple form of benefit like cash tax credit, etc. Carbon pricing mechanism that this mainly focuses on pricing schemes of CO2 emission and incentive structures for its reduction, like carbon tax. And then regulatory requirement, this involves making policy and regulatory framework not only amenable for creating an encouraging business environment for CCUS projects and this green hydrogen project, but also create some, a deterrent for emission, like permanent public procurement of low carbon product. So this basically it's a synergistic approach. This required to reduce this carbon part and to reach a target of 2070 as set by Government of India for making India as a net zero country. I would like to touch upon one very important aspect of green hydrogen here. And Government of India has revealed several initiatives for this green hydrogen policy, and bunch of incentives across the chain for producers of green hydrogen is there. Research on hydrogen fuel cell is advancing every day, and global hydrogen looks like, almost replacing the other fuels as new set of energy. So Government of India has unveiled green hydrogen policy and become global green hydrogen hub. We want to become a global green hydrogen hub. So nations like USA, Canada, UK, Norway, Australia, China, they have made some headway in creation and implementation of roadmap for the implementation of CCUS projects. But India has made some progress, but still we have a long way to go in terms of various initiatives, incentives to be provided from government side. Technological glitches are there, technological challenges are there, and then we also need some very good major policy reforms for net zero initiative. So I hope I have tried to cover, everything in a small set of time. I'll just say that for investment and easy business, come to India. Thank you very much. Thank you.
Deepa, for very covering covering all the aspects of the ENP sector as well as the entire hydrocarbon sector. Now I'll invite Mr. Vivek Rahi for his presentation on Indian ENP sector and attractive investment opportunity. Please, Mr. Rahi, please.
Ms. Deepa, can you stop presenting your screen? Thank you.
Mr. Rahi, please.
Thank you so much. Sure. Thank you so much. Let me begin by thanking the organizing committee to give me this opportunity to be part of the distinguished panel chaired by Madam Pomila Jaspal and co-chaired by A.R. Patel ji. So we've started with our first presentation on the key policy initiatives by the government. Now, in this next 10-12 minutes, I want to cover, the opportunities, investment opportunities that are emerging out of the policy and regulatory initiative by the government and DGH. So I have actually segmented my entire slide deck into 3 segments. First, I just want to set the context, and context not just of India, but also the global ENP context and the kind of challenges that it is posing to the overall environment. Then I want to talk about the resource potential in India. And then, of course, the last and important segment, which is the topic of my session, is to talk about the various investment opportunities that are emerging out of it. So beginning with the context, and as we all know that India already is a third largest consumer of primary energy, and first and second being US and China. Our share today in the overall global energy demand is about 6%, and which, if we go by some of the projections, is likely to increase over 100% by end of 2050. Um, and similar kind of a growth rate is anticipated in our per capita energy consumption, which we all know that today is much lower than the world average. So while on absolute term, India is the third largest energy consumer, but if we look at on per capita basis, we are probably would be there in the last quartile in terms of the countries. So what does it mean for India? I think if you look at the two graphs that you see on the right side of this slide, it actually presents the contrast between the world and India. And this is based on BP's recent energy outlook, which is and there were various scenarios under which they had forecasted. I have picked up the accelerated scenario. Um, so if you look at this, I think clearly the overall oil and gas demand in the world is likely to decrease. As you see, the oil demand is likely to halve by end of 2050. The gas demand is likely to reduce by about 30 to 35%. And as against that forecast for the world, in India, the oil demand is likely to remain what it is today or increase by another 10%. And for gas, it's a very bullish outlook. The gas demand is likely to increase to 4x. So what it means for India, what it means that as a nation, to ensure our energy security, we would continue to need oil and gas demand, right? And which means that as an energy transition strategy, while we are growing in the overall renewable low carbon energy supplies, we would still need to continue to focus on oil and gas to ensure that we are able to meet the energy demand of our growing economy. Now let's come to the overall global environment for upstream sector, and here I specifically want to focus on investments, and this is what World Energy Investment, the IEA, actually assessed in their report in 2020 and 21. If you look at the graphic, it's actually showing the annual spent on ENP. And if you look at the numbers, in 2014, we spent close to $800 billion. Now that got reduced to only $300 billion in 2020. So that's the first. So the overall outlook is that the investments in ENP sector are drying up. So that's the total ENP spend. But I think the bigger challenge is that the spent in exploration as part of the total ENP spend is declining at a much faster rate. So it was about 17% of the total spend in year 2014. Today it is only 9%. So that is in terms of percent. But if you look at the absolute number, in 2014, there were about 132 billion which was spent. And that saw a 80% reduction in 2020, which basically hints that a lot of companies are now focused. Just a second. Am
Audio
I
is audible now? Is audible?
Am I audible now?
Yeah, you're audible now,
Yes.
sir. Please.
Okay,
Okay.
great. So on that point, actually, so the investments in exploration is drying up faster. And that is primarily due to the volatility in the prices. And I think there is a general perception that if the prices are high, investment would increase. I think more than that, our experience is that for investments to sustain, a price environment need to stabilize rather than a higher price environment. And then there are, of course, reasons around that. There is a lot of investment now being diverted to low carbon and clean energy sources. What it means for the industry, and it is very important because I wanted to, start with giving a global context. I think one that significantly investments are not available for upstream sector. Wherever there are available, there are very strong ESG considerations. the oil price volatility is further, adding up to that pain. And there are, of course, workforce limitations. And then there is clearly a decarbonization effort and push on low carbon clean energy. So now, giving all this as a context, I think and this slide, and what I don't want to get into the details of this slide, but this is again, the earlier slide talked about the past trend, but this slide is doing a little bit of a crystal ball gazing into the scenarios of investments. And here IEA has kind of looked at three possible scenarios and looked at what could be the possible level of investments into the sector. And as you see that under APS and NZ scenario, which are announced pledges, and the net zero scenario, the investments is likely declining. So given this as a global context, right, we now need to look at what is the resource potential in India and how do we attract investments. Now, this is a slide, and it's a very beautiful slide which we have developed along with DGH. It actually, in a very simplistic form, talks about the overall resource potential in India, which was very recently reassessed. And if you look at the total in place prognosticated resource, that potential is close to 42 billion tons of oil equivalent. And out of that, 12 billion tons of oil equivalent is a discovered potential. Now, considering an average recovery factor of 30%, the recoverable hydrocarbon should be close to 4.2 billion tons of equivalent, out of which we have only produced 2.6 billion tons of oil equivalent. What it means for us? It means that there is a significant additional recovery potential which is available, and there is an opportunity for a lot of players who want to get into the mature or producing basin play. And I want to talk about the investment opportunities around this bucket in my subsequent slides. In fact, NOCs have come out with a new innovative model and have already closed a couple of auctions around that. So I'll talk about that. There is also a significant undiscovered hydrocarbon potential, which is close to 30 BTOE, which is about 70%. So there is a huge exploration play which the Indian sedimentary basins offer. And so these are some tentative indicative numbers that have been worked out. So even if we consider about close to 40% of success, there is about 12 to 13 billion tons of oil equivalent, which is yet to be found. And if that potential is explored, then we can, of course, tap about 3 to 4 billion tons of oil equivalent of production in medium to long term. So what it means is, broadly, if you look at, so the impetus is one, to look at the existing producing basins and enhance the exploitation, and which is where the play of enhanced oil recovery or through some innovative production enhancement models come in. And then there is, of course, the second risk, a second important impetus or strategic imperative would be to look at the exploration play and how do we minimize our geological risk, which is where a data will come into play, and how do we intensify exploration, which is where a lot of innovative exploratory models, the one the government has launched, OLP and others, will come into play. So I think NDR is a very critical initiative. I think we are one of the countries among some of the other mature countries which have come out with a centralized database, which is a repository of the entire ENP data for all sedimentary basins. The database already has a lot of data which is available and which is open and accessible to host of stakeholders, including the operators, service companies, and also academic and research institutions, for them to look and access the data and also bring out some insights and meaningful value out of that. So this is work in progress. As we speak, there are also many other programs which are being implemented, through which the data is being augmented. Along with that, I think there is a data visualization and interpretation facility which is being upgraded. Also, as I understand that DGS is also currently migrating the entire data to cloud, which will further enable the access of the data and for those stakeholders. And along with that, there is also additional acquisition of data which is happening in the focused basins, and Andaman Basin is one such basin where this activity is being carried out. Now, quickly moving on to what investment opportunities are we seeing in the Indian? So broadly, this is a very I've kind of bucketed all the investment opportunities into three broad opportunity buckets. The first one is around the large exploration acreages through OALP, and Deepa talked about the policy and the incentives that are being offered. So there is almost 70% of the basin which is available for investors to acquire data and accordingly, undertake the exploration. And as we talk about that 3 to 4 billion tons of oil equivalent of opportunity which is available yet to be found. And that OLP offers a lot of flexibilities in terms of investors could carve out acreages of their own interest, submit EOIs, and then accordingly. And very recently, government has also announced additional incentives for the category 2 and 3 basins where there is no revenue share model which is there. Discovered small field, which was again an important initiative. 2 rounds which were concluded, and third is underway where these small and marginal discoveries of NOCs were opened up for the small players to participate. And third is obviously the existing operating blocks in NELP areas are available, and entities to form joint ventures or kind of farm out their PI interest. So all in all, there are a number of opportunities of various size and attractiveness. And let's dwell down into the each one of these opportunities, and to begin with help. And there have been a number of almost, I think we have concluded with 6 rounds of NELP. And so far 1.56 lakh square kilometer of acreages have been awarded, about 105 blocks, and then committed investment of 2.5 USD billion. This is based on the minimum work program that was committed. And there are the subsequent 2 rounds are under process of award. So we have recently closed round 7. So there are a number of players, and we have seen a lot of action from NOCs and from a couple of players, though we also going forward as we speak, there are many international players who are looking at the databases, and we hope that in the coming rounds, we also see increased and enhanced participation from many international mid-sized TNP companies as well. DSF, as we discussed, I think this is an opportunity, and I think the focus, the idea behind bringing this round was to enhance the bench strength of the E&P industry. The idea here was to encourage more newly formed companies, startups, small organizations, small and nimble organizations who can take up small acreages and do a good job. And which is where 2 rounds have been concluded. The third round is underway. And so far, if you look at the entire numbers, the 232 million metric tons of oil equivalent has been offered so far. So this is another CBM has been another important initiative of the government. And I think 2 important things that a CBM auction brings to the table. One, that it really drives the unconventional agenda for the industry. And second, that given its nature, it's usually available in the coal belt. So it will play a very critical role in decarbonizing or cleaning up the coal belt of the country. So I think it's a very important initiative, not just from an oil and gas perspective, but it is also a very important initiative from I think the overall clean energy ambition of the country, the recently Panch Amrit, which was announced by the Prime Minister Modi. And I think this plays a very important role. There have been 4 rounds which are concluded, and there is a special CBM auction which is underway, in which 15 blocks across 4 basins are offered, and in the size of these blocks are much larger than what they were offered in the earlier rounds. Total area under offer is about close to 8,500 square kilometers. And as you can see, there are 6 states in which these blocks are being offered. So far, the investment made is around $200 billion and cumulative production till date is 5.1 BCM. Now, this is a very important initiative which culminated from which actually was emerged out of the cabinet reforms, where the NOCs had developed first of its kind production enhancement contract. So this was first time this was tried out in the Indian context. And I mean, broadly to talk about this, so while production enhancement is the larger theme, but there are 3 types of opportunities that are available under this. So the first set is, which is the flagship, is the bid out marginal nomination fields, where the nomination fields were basically, so it was a risk reward kind of a contract which was offered to small players, wherein the development and the operation of the field was outsourced to the contractors, and in lieu of their contribution, they were being given certain tariff, revenue share based tariffs for the production that they were producing out of this. So this was the first model, and the second model, which is under development and which was announced by ONGC recently at the EDIPEC, was around a similar kind of a model being worked out for medium to large kind of a field. Just to summarize the development in this space, I think there have been 2 rounds of marginal nomination fields. In the round 1, there were about 64 fields that were offered under 17 contract areas, and 12 companies had participated, and about 7 contracts are already operationalized and handed over to the private players. So now the entire operation and development is now outsourced to the private players. The round 2 is currently underway, in which 43 fields are offered under 11 contract areas. And this round is currently underway. There have been a number of changes that have been announced, including the compensation for the maintaining the baseline production. And then there is a large round which is under development, which ONGC had announced. These are 6 large fields in 6 onshore assets, and the in-place production is about 536 million metric tons of oil equivalent.
Yes.
So just to very quickly summarize, I think these are some of the very positive attributes of the market and why investors should be looking at us. High yet to find potential, high demand for oil and gas, and low market risks because of the recent market reforms announced by the government. Regulatory burden was a concern, but a lot of initiatives have been taken, and Deepa also talked about some of them underway. And then, of course, NDR and access of data and quality of data has been looked at, and that is significantly improved. And of course, low government take, which indicates that the government focus is to increase the production and not to give those fiscal incentives. So with that, I conclude my session. Thank you so much. Over to you, Patelji.
Okay. Thank you, Mr. Rahi. It's a very nice, excellent presentation covering all the aspects of regulatory as well as fiscal points. Now I will invite Mr. Rakesh Agiwal on the global perception on Indian E&P sector. Mr. Rakesh, please.
Mr. Vivek, can you stop sharing your slides?
So is my screen visible?
Yes, yes.
Good. Hi, good morning all. So the topic that I would be talking about is on global perception of Indian E&P sector. I have basically divided my presentation under these 4 categories. So the first category is the India's energy outlook and what issues are to be addressed, and what is Cairn doing to change the perception of the Indian energy outlook. and some of the key enablers which will help us doing that. So I think majority of the content which Vivek and Deepa shared that is identical over here as well, that India has a very low per capita consumption, but this demand is continuously growing. And with the rising population, rising GDP, the oil demand is likely to go up. While the world is Vivek said that the world energy demand will come down, the scenario doesn't look the same for India. So we will still be highly reliant on the fossil fuels even until 2040, is what that international energy agency report has highlighted. So if you see in 2020, we are reliant, 32% of our energy demand is on the oil and gas. And that story remains in 2030 and that story remains in 2040 as well. So what are some of the issues which are hindering us from becoming Atmanirbhar? When we say Atmanirbhar in crude oil and gas, how do we increase the domestic production is how we have to understand this topic. So majority of our fields are matured, they are declining. We had a very conservative approach in exploration. So as Vivek also highlighted that more than 70% of the country's sedimentary basins remain unexplored. Over the last 15 years, we had very limited discoveries and we have not been able to attract foreign investors. Policy reforms which Deepa highlighted, are they adequate or is it too late? So that are some of the points which are seeking answers from us. So what is Cairn planning in terms of its investment plans to change the global perception about that India can produce hydrocarbon? So we are basically unfolding the investments under 4 key buckets. The first bucket is how do we improve recoveries from our existing fields, which we call the ASP technology. The second is intensifying exploration in our PSC and the OLP blocks. Third is how can we undertake a shale exploration potential at the Barmer Basin. And fourth is how do we expeditiously monetize our existing and new discoveries. So a very aggressive investment plan has been put in place. So if you see if we don't make these investments now, the base production profile will continue to go down, and so is the story of the country. So ASP plant that we are talking about is going to be one of its kind. No such plant has been built anywhere across the world. So that can add around 270 million barrels of oil. So there is a plan for that. If you see the exploration and production portfolio for Cairn, so we have 3 PSC blocks, which is Rajasthan, Kembe, and Rawa. Rajasthan we have divided between north and south. And in OLP we have got Rajasthan, Kembe, and northeast are the main areas in onland, and east coast and west coast as the areas in the offshore. So there is an aggressive investment plan in each of these areas. So you see RJ North, we have 13 prospects, which we have planned for the next year. Same is for the RJ South. Then we have for Rawa exploration, Kembe, and then the OLP blocks where we have achieved some limited success in the beginning, and then there is an aggressive investment plan over the next 6 months. Shale is, we have done a good, we have completed our studies on shale, and we have basically identified a few prospects to drill exploratory wells over there. So which we want to plan drilling in this year itself. So this can unlock a big kind of a play for the country. And then the monetizing existing and new discoveries. So there is and then there are proposed projects which are always a kind of a funnel of projects which keep coming up to make sure that the investments are ongoing. Now these are some of the enablers which will help us achieve these objectives. So first is the fiscal levers. So while there are pre-NELP and HELP regimes, the government levies in the form of cess and royalty can be same for all. So that can help a bit in terms of our project viabilities. Then Deepa talked about the ER incentive, but is the policy adequate for the pre-NELP blocks? So currently what our understanding is that the policy still doesn't make the project viable, even up to $75 of oil price. Oil and gas is not under the GST regime, so that is making our input costs very high. So almost 10 to 12% of our costs goes up just because we have to pay additional input cost. On intensifying exploration, I think a lot need to be done on to promote exploration in our PSC blocks, and similarly in the OLP and the DSF blocks as well. How do we get the time extension on account of the second wave of COVID? Unconventional hydrocarbon will require a completely new set of policy regimes. So whatever policies have come so far, for pre-Nile block, it is not going to make it viable in any scheme of things. So our thought is that this requires a completely new set of policy guidelines with rationalization of the government levies so that the projects become viable. And some of the other aspects that we need in terms of policy reforms is how do we make sure, because in the PSC blocks, again, if one partner is not consenting, the project is basically coming to a standstill or a stall. How do we create a policy framework so that the consenting partners are able to execute the projects? Marketing freedom and tax parity in oil and gas imports is also very important because we don't get the right price for our oil. But there is a 5% CHA or VAT with oil which we sell from one state to the other, but there is no import duty on oil. And how do we basically improve the approval processes? How do we make it more user-friendly, ease of doing business in terms of self-certification? So those are some of the reforms which will help us in achieving what we are trying to do. Increase investments and increase production. Thank you.
Thank you, Mr. Raju. Rakesh, Agiwal, very nice presentation, very small, very precise, and very valuable. And you have covered many aspects, including the investment plan of your company. It's a very aggressive plan, and we need such type of companies in India to improve our production and monetize the whatever resources we are having. So thank you, Mr. Rakesh. Now I invite Mr. Raajeev Tirupati on his talk on the accelerated investment opportunities in India.
Good morning, everybody. This is Raajeev Tirupati. I head the commercial team at Antelopus Energy. Firstly, I would want to thank the organizing team for giving me an opportunity to speak at this distinguished forum. So my topic for today's presentation is accelerating E&P investments in India, the opportunities and imperatives. So before I delve into my presentation, I'll just take a couple of minutes to introduce our organization. We are Antelopus Energy. So we are a company which was incorporated in 2018 by seasoned oil and gas professionals in the Indian and international oil and gas upstream sector. Since the last 4 years, we have successfully completed the seed funding round and followed it up with even more successful Series A funding. So currently, as we speak, we are funded by 2 large international funds. And as a part of our business approach, so we are on continuous lookout for capital. And this pursuit has led us to reach out to various investors, both domestic as well as international, in both equity and debt markets. And so far, we've been successful in selling the India growth story. In the next couple of slides, I will be taking you through what our experience so far has been with both domestic as well as international investors. Some of the key aspects, maybe I'll just briefly touch upon when you are actually approaching an investor, be it a domestic investor or an international investor, is the selection of funds themselves. See, there are a plethora of options for us to raise capital, be it the Indian market as well as foreign market. But we'll have to be cognizant of the fact that the technical know-how and expertise of investment in the upstream sector is limited. One of the reason is in terms of the limited understanding of the upstream sector, let aside India alone. Only large funds have both the techno-commercial aspects and understanding of investment and the kind of returns, the expectations in terms of the returns. And so that limits our options to larger established funds, be it Indian or foreign. And not all funds have the mandate to sort of invest in the upstream sector. So we will have to be cognizant that what is the funds mandate in terms of investment, whether they are okay to invest in the energy sector. Energy sector, I mean, not the energy sector, you will have to understand covers the entire gamut, be it the upstream, be it the clean energy, be it the renewables. So we'll have to be very specific when we approach the funds that we are an upstream sector. And do they have a regional specific mandate to invest in India or in any other emerging countries versus the more established and developed nations? So once we have sort of narrowed down on the funds, so we'll again have to be cognizant of the fact that our capital projects will be competing against the global projects which are in the portfolio of the international or domestic investors, be it clean energy projects, renewable investments. So all of these will help us narrow down and sort of touch base with or shortlist the right funds who have the appetite and the technical and commercial know-how to invest in the Indian market. So the next thing is you need a great story to sell. And fortunately, India does have a great story to sell. I think over the last 4 to 5 years, as my fellow panelists have spoken about, I think we've hit the right chords, be it in terms of opening up of the discovered small field rounds, and in terms of pricing and marketing freedom. We'll have to be very happy about the fact that our commodities fetch market prices, be it both on the oil front or on the gas front. So which is a very, very encouraging sign for investors. And while selecting the investors, we'll also have to be cognizant of the fact that it has to be a long-term sort of investment which these investors are wanting to put in. Because that gives us a lot of flexibility for the upstream producers in terms of looking beyond a tenure of 5 years, which is typical gestation period for any oil and gas company to start generating decent amount of cash flows. So once we have successfully sold a story, I think the next challenge is in terms of structuring the capital itself. We've looked at both debt and equity markets. And our experience is that debt markets are very, very hard to tap into for a company of our size because they need some sort of a backing through your balance sheet strength or funds for them to lend you the capital. And let aside the international markets, we've struggled to raise capital even in the Indian markets. So I think one of the initiatives which we through this forum will want the government to look into is, allow us smaller upstream players who are wanting to make the difference in the Indian upstream industry, tap into the local public sector banks who will then lend us some money in developing the standard assets. And last but not the least, both the investors and the management team look for attractive commercial metrics. The multipliers on money, the IRRs have to be attractive for an investment to be successful, be it in India or be it anywhere else. So moving on, having touched upon, I think I've given a decent flair of what the investors look at. But let me now look at brief you about the key drivers for investments and how we as India are regarded in terms of a favorable investment destination. I know it's a busy slide, but let me just categorize this entire thing into 3 different buckets. So one is you need to have the resource potential. I think most of my fellow panelists have already talked about it. The second one is in terms of the market potential. You need a market which is stable. And the third one is the economics of the project. So let me just go into detail in terms of the below ground potential. Again, as many of the fellow panelists have already touched upon, I think there's a significant opportunity in the category 2 and category 3 basins, given that 70% of the Indian sedimentary basins still lie unexplored. So we will have to focus and build a story in terms of creating value in these basins by, I know the fiscal incentives are already in place, but in terms of data availability, in terms of the seismic data availability, in terms of the well logs, in terms of exploring these particular basins, there's still a lot of work which needs to be done. So now that we know that there's a lot of potential, so we will now have to take into account how the Indian sedimentary basins are perceived in the global market. I mean, where do we rank among the global peers? Because when we approach the international markets, we'll have to realize one thing, that we are competing for capital, for projects against other developing nations like Latin American countries or Southeast Asian countries. So you will have to market your hydrocarbons in such a way that it sort of appeals to the global investors. Again, there have been a lot of activities undertaken by DGH and Ministry over the last few years. I think we can perceive that there's a change of or a shift of sentiment of investors from the erstwhile regime to the current regime in terms of India as an investment decision. I think there is the movement in the right direction, but still a lot needs to be done. And I think one of the key steps is to rope in global experts and reserve certification agencies to sort of review and market our resources to a greater extent. As my fellow panelists have pointed out on the NDR, I think it's the right first step, but there's a lot of room for improvement, the scope for improvement in the NDR. It needs an additional promotion in terms of revamp of the NDR itself. Again, last but not the least, I think every investor looks for the presence of international players in participation in the bid rounds or OLP rounds. We have conducted 6 OLP rounds successfully, but still there's an absence of a big or a medium-sized international investors participation in this particular block. I think having those will send the right signals to the market, and it'll help us, in terms of raising the capital. Now coming on to my second portion, which is above ground, which is in terms of the demand and infrastructure presence. India is an ever-growing market. It's the 3rd largest consumer of oil and gas. One good thing, as I already pointed out, is in terms of the pricing. Our pricing is in line for both oil and gas with the global benchmarks. And fortunately, we don't have any default rates on the sales where there's non-payment of money by the customers to the producers. So this is one of the favorable ticks which investors always look for. And I think we are in the top quartile in that particular aspect. Then coming on to the infrastructure bit. So we have a very well-developed infrastructure. Again, in my view, it's a little skewed on the west coast and onshore. But if you look at on the eastern coast, right, so it's still a virgin territory, and Mahanadi Basin is still underexplored. So we will have to sort of create some infrastructure ecosystem over there to develop standard oil and gas assets, right? And in line with most of our I think we are sending the right signals in terms of we shifting from a coal-based economy to a gas-based economy. And I will touch upon this point in my next slide. In terms of the development risk and reward, I think one very good thing that has happened over the last few years is the launch of discovered small field rounds. Traditionally, when we used to approach for an investor for investment into oil and gas, their only concern was if it's an exploration play or it's a discovered play. So through this discovered small fields, I think we have completely managed to eliminate that exploration risk. So this the discovered small fields along with infrastructure sharing with the existing facilities, I think is sending out the right signals because it's a faster way to monetize these stranded assets, and the returns are reasonable in terms of reasonable expectations of the people who are willing to invest in oil and gas. Again, somebody has pointed out on the production enhancement contracts. I think it is the right step because there are lots of fields which are not under production but can still have a lot of potential to produce. But I think having a right business model, attracts a lot of investment. Production enhancement contracts, I think true to their spirit are production enhancement contracts, but I think they will have to be relooked in terms of the business model for to make it more attractive to the investors, right? And the last but not the least is in terms of statutory clearances. I think a lot has been done by DGH in the recent past, but I think statutory clearances still remain the biggest cause of concern for at least operators like us, because even if it's a 1 or 2 year delay in terms of getting these clearances on board, we will still have to shell out the G&A expenses, which takes a hit on our commercials and economics of the project. I think these having a key focus on getting the statutory clearances on time is key. It will send a positive message and entice investments in India. Overall, I think we hit the right chords, but there's a ample scope to do better in terms of what we can do to make India as a favorable investment destination for the upstream sector. Moving on, I think the lot of focus these days is in terms of the ESG metrics, right? Everybody wants to invest in hydrogen projects, but you will have to differentiate between emerging markets and developed markets. Oil and gas is here to stay. We have seen that in the recent past that we cannot dispense off with oil and gas. The Ukraine-Russia war has showed us that. So any transition in India will have to happen through gas. Right. So from coal directly to hydrogen, it is going to take another 10 to 12 years because you need the right policies, right investments, and the right economics for it to work. So any transition from coal to hydrogen in India, at least, has to happen through natural gas. And I think we are sending out the right signals to the market, wherein we are wanting to increase the share of gas in the energy mix from 6% to 15%. There's a host of infrastructure activities, be it in terms of integration of Northeast to the national grid or Urja Ganga pipeline, which is coming up. There's a gas exchange that has been created and e-auction systems have been developed. There's still a little scope for improvement in these two aspects, but that's a positive step. And again, inclusion of GST will surely help in terms of the improved economics for the upstream sector, because the costs are actually inflated by 10 to 12%, which we as an upstream producer, whether the gas prices are favorable or not favorable, will still take a hit. So this is something which has to be looked at, and this is going to help the upstream producers a great bit. Now coming on to our transition to hydrogen. I think a lot has been said in the recent past about hydrogen, whether it is green hydrogen, blue hydrogen, but I think more coordinated approach in terms of government and businesses has to be in place, in terms of whether technology infusement, in terms of investment, because hydrogen can be fungible across all the sectors, but currently the cost economics don't work. So this is where government and government policies and government investments, whether it is in hydrogen technologies or fiscal policies, is going to help. And surely, I think in line with other countries, European countries who are currently focusing on the hydrogen market, we should look at viability gap funding directly or indirectly to make these projects work. Again, the key takeaway from this slide is India investment should be gas focused, and any transition to hydrogen from coal is going to have to pass through the gas markets. And that is what makes the gas story a very, very interesting topic. Summary, I just want to conclude that investment is all about perception. So we'll have to send out the right signals to the market. I think we have all the right ingredients. I think it's only packaging that is required. We will have to sell the India growth story. We have the demand, we have the policies in place. All we need to do is a little more work in terms of packaging it very efficiently and put it out to the market so that we have the right people participating or investing in India. Again, in addition to that, we will have to focus on any energy transition and policy measures. Again, as I said, any transition from coal will happen through to hydrogen will happen through gas. So we will have to start with focusing on gas, and then in parallel start developing policies which will help us move to an efficient, a cleaner fuel, right? In our view, I just want to sum it up saying that oil and gas is going nowhere for at least the next 10 to 12 years. In India, at least, or in the emerging countries, both of them will have to coexist for at least a considerable near-term future. So with that, I close my presentation. Thank you.
Thank you, Raajeev, for excellent. And we have covered your you are the only company. Your company is the only company where they have wrapped into the private equity for the ENP sector in India. So you should go up and you should become a role model for other companies also. And you should share your experiences to other companies so that they can also go ahead in this direction. So I think these our sessions are over now. We have one question regarding this. Somebody is asking that there is some regulatory hindrances are there. Then how can we this place?
Yeah, sure, sir. I'm very happy to take this question. Give me a second.
Ma'am, you can continue, please.
Yeah, so these regulations and policies, I will say that they are always made to facilitate. It is a balance of national concern and investment concerns. I'll repeat, it's a balance of national concerns and investment concerns. In last 5 years, a series of transformational policy reforms have been introduced, laying the path for unlocking the value of Indian hydrocarbon industry. Be it your natural gas pricing and marketing freedom, your data repository, and then one nation, one grid, switching from PSC to revenue sharing contract, DSF and CBM bid rounds. So, but having said all that, the positive suggestions from stakeholders is always invited, and government is working very hard, wholeheartedly, and ready to accept the feedbacks. And there is always a scope of improvement. I hope it answers.
Yes, madam. Very good answers. Now I request our chair, Mrs. Pomila Jaspal, to sum up this session, please. We are muted. Madam, we are muted.
Thank you. Thank you very much. I have listened to all my panelists. Let me first of all congratulate the organizers of this Upstream Ahead and Social Friendly for inviting me as a chair for this session. And this particular session, this Upstream Ahead, has come at such a juncture when the whole world is going through this geopolitics because of the Russian and Ukraine war. The things have almost tumbled down. So there were talks earlier of, you can say, investing less on the E&P activity and making it more towards the this thing green and carbon emissions neutral, and more focuses were given to that. But ultimately, and the call of the day was that ultimately most of the companies, many companies like Shell, the British Petroleum, so they have almost made their long-term plans to withdraw from the E&P, the conventional hydrocarbons, and move towards the green energy. But now I think the world has to again think over, moving it, the carbon and the green energy may be a parallel story, but at the same time, a kind of you can say more capexes are to be spent on the E&P sector. And especially with regard to the India, I would say that the situation in India is such that all the panelists Deepa, then our KPMG, Mr. Rahi, then Raajeev ji, and Raajeev ji, and this thing, Rakesh ji, Agiwal. So they all have said very nicely. They have brought out the way, the enabling framework which our country is already having. Let me tell you that I have seen through this story. I have already spent almost 36 years in this industry, in you can say oil and gas sector. I have gone through this this journey right from the, you can say, the head this thing ONGC, then the policy framework, then the regulatory framework, then back to, you can say, our field operations, and now in the downstream sector. So I have seen this journey right through as a total 360-degree. And I can just vouch for this, that lot of, you can say, enabling mechanism has has dwelt over the last 10 years. Of course, the journey started with the, you can say, the pre-NELP regime, then pre-NELP it went into NELP regime, and then the NELP, I think about 9 rounds were there. And after that, then we started with the HELP regime, then OLP regime, then the discovered field policies, the nomination regimes, the discovered field policies, and then the HLP regime. And then we are going ahead with now various, you can say, cut short methods like the production enhancement contracts, the, you can say, technical service contracts. So, but then ultimately what we have to see is that within our country will remain, it is the third largest consuming country in the world, energy, as regards the energy sector is concerned, and it will remain in that direction. And I can say over here, sitting over here, that when we see that, the requirements are domestic production in the country, so domestic production in the country is too low, I would say. So we have to have lot of, you can say, leash out our this thing, our unexplored areas to this world, and by making more, telling more growth stories in the world, and that will make us, more domestically rich in terms of oil and gas. Let me thank you, Deepa. So Deepa has very rightly pointed out about the policy framework for encouraging the oil and gas sector. So she narrated the whole growth story from 2014 till 2022. Like we started with the HELP, we started with OLP, then the various rounds which have covered the various gas-based economy, the biofuels, the hydrogen, and the various plans of the government, the various targets of the government, then the decarbonization mobility and our vision. She brought out very nicely, very lucidly. She brought out that a lot of improvements has already been made, especially in the sector, especially in the clearances sector, like various environmental clearances were there. So those environmental clearances which were taking a long time, not only the environmental clearances, I would say, I can remember the time when, the particular environmental clearance would go up to 1.5 years or 2 years. And the particular exploration block will never get a license for going ahead with the exploration activity. But then this now, the clearances, the single window clearance that has come up, so that will definitely help the various investors to come for this particular sector. Now, what I have found is that the investors, they used to be very much worried, very much concerned about, and many investors, they have gone away. They have withdrawn from the country, and they have gone away because of not getting the environmental clearances. So I can remember there was one, this ENI Italy. now that ENI Italy, so that they had to withdraw from the block because they could not get the defense clearance for their Andaman offshore block. So that was a kind of, you can say, concern which these companies were facing. So I think that this is a time, because when our country is having only 15% of the domestic production, so we have to increase it. We have to increase it at least to a figure of at least double, so that the burden on the country is also not much over there. Then secondly, as regards, so I think Deepa has done it very nicely, and I'm really thankful to her. She has brought all the, you can say, the enabling factors which have come right from the beginning till date, I think, and what more can be done in this direction. So she will advocate that with sitting in DGH, and she will definitely, help the investor community in that regard. Now, Vivek Rahi, our KPMG, our partner from KPMG, so he has very nicely he has brought up the attractive investment opportunity in the E&P sector, the investment opportunity that is coming up in the present landscape. He has explained that how the E&P investments, which were in the range of 17% during 2014, has come down to, you can say, just 9% in 2020. Maybe the one of the factor will be that because we are slowly, we wanted to shift towards the, you can say, the green energy or the carbon neutrality, and the statement which our Honorable Prime Minister has given before the COP 26. So that is there. But at the same time, more important is that lot of potential. That is what Vivek has brought out, that lot of potential is there within India. So where we have to, unleash that particular potential. Now that unleashing that particular potential, he has also, given certain narration with regard to that, the various incentives, which which are already there and which more can be there. And one important direction in this regard is regarding which, because our fields are mostly maturing now, so we have to definitely increase our exploration in the country. And exploration in the country, we have to, of course, increasing the exploration in the country, so that one particular company on a single standalone basis, so that they will have to, you can say, by partnering with other companies. So by partnering with other, you can say, the big companies also. So that also we have to see. So that will be a very good kind of approach where we can partner with other companies. And I remember, initially in the pre-NELP days, there used to be companies like Shell, the Exxon Mobil. So they were there in India. So they were into the exploration blocks, and rather so-called our Rajasthan block, which is being operated by Cairn now. So that was originally it was steered by our Shell at that point of time. So the lot of big companies were already into India, so they are knowing about, you can say, the exploration or the sedimentary basins of India. So it is just to, can strengthen that thing, and we have to tell our growth story over there. And the growth story is already known. So where, we have already everything we have. I think there is no corner left now where we can do more. As regards, the enhanced oil recovery is concerned also. So that also we are going up. We have already have the incentive scheme with regard to that, and then another exploration side also, where, the category 2 and category 3 basins. So that they are almost free to the investors. Only when very, 50% of the statutory payments are to be made, there are no PRP, there is nothing like that unless and until there are windfall profits. So Vivek, I think you have already gone into this initiative with ONGC. So when we had gone for this production enhancement contract, so the first production enhancement contract, but then of course that was just as a, you can say, starting exercise. But then as we moved on, we could settle down for better terms also, so that in order to encourage the investors, so then we went for the 64 64 fields. And then we are going ahead now with the better terms, with the, you can say, the further the third round of the production enhancement contracts. I think for the large fields, and you can say the middle fields, I feel that the some kind of a partnering can be done, because we cannot because they are big fields and they cannot be managed by those service providers also. So we have to have a kind of a balancing mechanism in our contract itself, so that we get maximum out of those contracts. In this, I think the best part would be that if, with this now the partnering of the contracts, the strategic, this production enhancement contracts, if we can have a better, you can say, more enabling kind of a fiscal regime, so that definitely that can definitely do, make it a great success. Then I think CBM also you talked about, Vivek. So CBM also, you said that we have already done various rounds now, and in that CBM rounds also we are the driver is that we are moving to the unconventional resources. And if government already has a now unified policy for this licensing policy for CBM round, and if we can drive it more, so that will be by the efforts of everyone, so that will really help in this direction. Then I think thanks a lot, Vivek, for giving us giving to the investor community also, and giving everyone on this who is attending on this forum a rightful attitude, and showcasing our growth potential within the country. Then the next was our global participation on Indian E&P sector. Just 1 minute. So our Cairn Energy, Rakesh Agiwal, so he could, in fact, he is one of the person who is, apart from the national oil companies, he is one person, or his company is one entity who has seen the, you can say, the growth story within India. I remember the Cairn people, so they ventured into oil and gas in the year 96 or 97. So when this Rawa project was given to them, and then slowly, so they went up to this Rajasthan field, and they have seen this the success story of the Rajasthan field. And today, the Rajasthan field is giving almost 1/5 of the country's production. So from that point of view, I feel that the Cairn, the success story of the Cairn within India, that will showcase to the other investors also, and how they are contributing to this industry. So and more important is, I remember that Cairn, whenever they are naming the discovery, any discovery, they are naming after the goddesses. So that is also very important. So that is why, so all the blessings are on the Cairn Energy. But then the various, in their presentation, our Rakesh, he has briefed on how the shale pilot wells, how they are also looking into that, and how they want that this shale pilot wells, it should be treated, and it should be, taken up as a, you can say, another parallel activity in their Cairn block. And then he has specified certain enablers also. And one of the enabler is that, of course, there are, because within India, so there are different regimes of the royalty and cess, because it has, grown from different regimes. Now, sometimes for the government also, it becomes very difficult to, have a uniform kind of a regime for all what has happened in the past. So, but then, we have moved from 20% as regards Rakesh, I can tell you, our success story within India is that we have moved from 20% of the royalty to, you can say, 12.5%, and from 12.5% to 7.5%, and from 7.5% to 2.5%. That is the extreme royalties that we are having. So we are working in this regime. And of course, for your Rajasthan block, if for example, you are having this 20% regime, but at the same time, you are having high returns also. So that is one part of the story, and that was a production sharing regime. But now we are having a revenue sharing regime, and with now you will find that for your other blocks, it is more like a uniform kind of a royalty regime. So as regards the other enabling factors are there, you said that there is a reason for if we can revisit the ER, enhanced oil recovery regime, and incentive policy that has been very adequate also. I think the government, the DGH from their side, if they can just revisit that, and if something more can be done on that regard, maybe on the on part of the enhanced oil recovery is such that you said that it is not even with the present incentive regime also. So at $75 per barrel also, it is not economical kind of a situation. But at the same time, you will feel that this enhanced oil recovery comes into effect only when the normal flows are not there. So once the normal flows are not there, so when the normal flows are there, you have already recovered the cost. Most of the costs you have already recovered. So these costs, government is just helping. Government is just helping or enabling the investors. But definitely, point well taken. And that I think DGH will definitely look into that, and then it will, if there is some reason to, you can say, revisit it, and definitely that will be taken care of. Because ultimately our aim of the government is also that we have to encourage the exploration and the domestic production in the country. And another important thing, what Rakesh has said is about the Section 42 exemption. So that I think that is very relevant. And Section 42, it is talking about that drilling expenditure, I suppose. If I remember now, it is talking about the drilling expenditure. But now with the, I think with the Rakesh, we will have to see with this alternative tax regime also. So whether still that Section 42 is relevant. But if we have to reduce, if now we are going by this section with this alternative tax regime, where we have to pay a reduced tax, so these deductions will not come in effect. But definitely, so your point is well taken, and important is that exploration within your area. So that exploration, I think the government, the DGH, of course, the government has already enabled in that direction, and definitely the steps will be made. But then definitely, I think the onus is on the Cairn Energy to showcase your growth story to all the investors, including you also, so that there is a lot of bidding within the country, and we are able to develop more resources within the country, and we are able to attract the more big investors also into our country. Thanks a lot, Rakesh ji, for giving us a very valuable insight into from your perception, from you can say other side of the government, that what from your point of view you are feeling as an enabling factors. Thank you very much. And lastly, the last presentation was made by very lucidly made by our Mr. Raajeev Tirupati. He is from Antelopus, And I think that is Antelopus itself, that is a growth story. And that is very well said by our co-chair also. So that you have to, first of all, you have to narrate your success story to the world and how prolific our Indian basins are. And what I would say is that, in fact, your company itself, that which has the largest capital funding, and you have the capital funding from the international market, so that will definitely help to give the growth story to this. But definitely, as you rightly said, so we will definitely go into the various points that you have raised, and the government and from DGH point of view and from our organizers point of view also. So we will take it forward. The thrust that you are wanting to let us know that our Indian banks also, Indian banks also, they should also understand the prospectivity that how we are working in the A&P sector. Now, for example, in the A&P sector, it is well acknowledged that the inputs are deterministic, but the output is probabilistic. But in case of, for example, in the manufacturing industry, or for example, in case of our refinery also, now here the inputs are also deterministic and the output is also deterministic, input and output. But in the oil and gas, the input and output, so there are probabilistic. So from that point of view, I think so that our industry, so we will definitely take up that with our banking sector also, maybe, and some capital funds also. And but definitely I can make it sure that some kind of a way forward can be definitely made. In fact, in case of our own company, when the capital market was not conducive to that kind of debt financing, but we took that debt financing to our NCDs. So that was for the capital, you can say, buying of the share in a company. So that was well acknowledged by the capital funds and the debt funds also. And we raised the NCD of 1,200 crores, and it was oversubscribed, and we got at a very nominal rate of 6.15%. So that was very good. So if we are able to raise, so only thing is that we have to educate our our bankers, our capital funds also. So this we will definitely go into that direction. And with this, I am very thankful to you for showcasing us. And definitely Antelopus will go a long way in telling the India's growth story also. And with these words, I think every participant has done wonderful job in this particular scenario. But at the end, I would like to just 2-3 things I would like to highlight. One is that we will take it forward, that although we have a lot of enabling factors now, but at the same time, the clearances part, if we can just think over again, we will have to revisit again, and we will have to see that how we can further reduce it. Almost, I think there were the DGH has already done the various clearances which we used to have under the RSE mechanism, maybe some 13-14 clearances. So that has gone almost half, not 1/3 now. It has gone to that extent. But definitely this, especially with regard to the environmental clearance and with regard to the land acquisition. So these are 2 key areas, so which we need to further thrust upon. And secondly, regards the cess, as very well brought out by our Cairn also. So this also we have to take it forward, because now we are, we are bound by that 4,500 rupees per metric ton. So maybe that we can make it on a graded basis. As when there is a windfall profit for us, then the this cess is at a different rate, but when we are working below a normal rate of $75 to $80, then it is something else. So we have to have some grading system for the cess also. And the royalty, I think we have already, the government has already made a lot of progress in that, and that I have already told you, it has gone from 20% to just 2.5% now. So that is the kind of, you can say, the incentives that has gone, that has rather already, come on the ground. So that I think that will be more, that is okay. But the cess part we will definitely take into account. We will take up with the government also. And then, of course, the third part is that as regards the taxation is concerned, so we will advocate with the government, with the Ministry of Finance, that if this ATIA, that is that infrastructure status is given to E&P sector also, and where the ATIA, the E&P sector, the other infrastructure status, they are given some, you can some kind of income tax benefit holiday for 7 to 10 years. The same can be given to us, although that is there, but then it is only for oil, it is not for gas. So we will definitely take up with the government. With these words, I think I send my greetings to everyone, to all the people who are, all the investors and all the students, everyone who is joined on this particular session. And thanks to all my panelists also, and to my co-chair also. Thanks a lot.
Thank you.
Thanks.
Thank you so much, ma'am. Thank you.
Thank you.